really, I'm focused mostly on good growth capital right now, as you mentioned. And we're a 3-year-old VC firm. We've invested 2 funds. We're raising our third, over 30 companies in the portfolio, and having a lot of fun doing it.
Welcome everybody back to the Strategy Show. I'm your host, Severino. Today with us, the co-founder of Harbor Entrepreneur Center, managing partner of Good Growth Capital, currently raising 100 million target VC fund to invest in early stage tech companies. Welcome everybody, John Osborne.
Hello, good to be here.
So cool to have you here, because we will explore with you how to build your brand, how to build your team, and how to know your numbers. And this is so important right now. So, John, what are you currently creating?
Well, really, I'm focused mostly on good growth capital right now, as you mentioned. And we're a 3-year-old VC firm. We've invested 2 funds. We're raising our third, over 30 companies in the portfolio, and having a lot of fun doing it. But yeah, it's a great time to be in a different asset class and early stage tech, and private equity is a great spot to be right now. We're having a lot of fun.
And let's go to your very first CEO tip: build your brand.
Yeah, I mean, for me, as you mentioned, the 3. So building your brand, I think, every CEO has to be that ambassador and leader and out there, as an evangelist for, the mission of the company and what they're doing and what they stand for. And, whether it's a podcast, whether it is a coffee meeting, whether it's dinner conversation, whatever it is, I mean, just a, unequivocal evangelist for what they're doing and what they believe in, and so that they're just telling their story over and over and over again to build that brand in every circle that they find themselves in.
Your second tip is about the team. So we have the brand now. Why do we need a team?
Yeah, I mean, I'm a firm believer that you can't go very far by yourself, and really surrounding yourself with the right people, and that includes, actual staff that are employees of what you're doing, but also who your advisors are, who your contract service providers are. To me, the team is not simply who's on the payroll, but it truly is who's around your life, who's around your company that you're either paying for or engaged with or seeking counsel from, and to constantly be building the best team possible. We at Good Growth have been super fortunate to build a really robust team of advisors and venture partners around the fund that help us with due diligence and sourcing of companies. And they're not on the payroll, but they're really, really valuable brains and expertise and experiences as we evaluate which companies we're going to ultimately invest in.
I like it to see the team, not just the people in the core, but suppliers and sources. And how do you make the stickiness so that that doesn't become a loose network? What is holding you together, and how do you manage that?
Yeah, I mean, I think it certainly depends on how critical they are to your day-to-day activities, and therefore how sticky that engagement needs to be, versus someone that there's just a relationship there that on an ad hoc basis, when you need that particular piece of advice or troubleshooting of an issue or service, that who to call on, that you can be confident that you're getting the right either advice or delivery of their service. And sometimes those might be every day, every month activities, and sometimes they may be once in a career activities. And I remember vividly one of the companies that was in the accelerator program was coming up on an exit, and really, the acquiring company was a large company, and this was a one-person show, and he was like, how do I negotiate the best possible outcome for the sale? And I put him with a really, really good law firm that could go toe to toe with the corporate counsel, and he's eternally grateful for that, because they really went to bat for him and made it a good outcome. So someone like that you don't need every day, but knew exactly who to go to get it done.
What is currently harder for you, to raise the 100 million or to find good startups to invest in?
Yeah, for us right now, it is raising the 100 million. And, mostly that's driven by we're now in the institutional fundraising world, not raising from friends and family anymore. And, we're still, even though we've got a great track record and all the partners have, experience prior to us coming together, we're still a 3-year-old firm. And for a lot of these institutional investors, they like to see a longer track record before committing 10 million, 15, 20 million into a fund. That being said, we're still confident we will get there. It's just taken us a little while to get through all the diligence.
Yeah, so how do you show that they should invest in your fund versus others?
There's definitely the money out there. It's just finding who's a good fit for it. We check a couple of boxes for institutional money that they're looking to allocate for, emerging managers being one. I mean, several have buckets that are specifically for emerging managers. We just got to sort through, the couple hundred on the prospect list to see who has an emerging managers program.
You want to make your sales more repeatable and reliable? Do you want to have less volatility and more growth in your revenue per month? At Strategy Sprints, we do only one thing: strategy in sprints. Strategy means having more revenue through a better offer. In sprints means having more energy in your team every week. Check out if your ROI is as high as it is for most service-based and online businesses and startups we work with, which is over 100%. You can see it in just 15 minutes by going to strategysprints.com/sales and completing our online exercise to know what your ROI would be with our accelerator program. We are ready to sprint. Are you?
We are also a majority women-owned fund. I have 3 women partners, and several of, if you follow venture at all, you'll see the narrative around the getting more women into VC. And so some institutions have a emerging manager for women fund, and so we're just sorting through those. So it's really just a matter of who's the right fit. We know the money's out there that wants what we're doing. We just got to sort through all the noise to find it.
Before we go to knowing your numbers, we pass through the award. If you could only pick one person when everybody's zigging, this person is zagging, but from your perspective, they're doing the right thing, who is this person?
Ooh, I mean, when you tee it up that way, the first person that comes to mind is actually my co-founder of the Harbor, Patrick Bryant. He always seems to read the market really, really well and have an understanding of how to be 2 steps ahead. And so I would say less of a zig and versus a zag, but more of a, you don't know you're going to zig yet, but he's going to make sure he's there when you do. And he's really, really good at that.
What numbers should we always have on top of our mind?
Yeah, I mean, there's lots of narratives, and I'm sure some people on the show have talked about KPIs, but for me, knowing your numbers is really an understanding of what your cash flow looks like, what your balance sheet is, and how long your runway is. I can't emphasize enough that especially to the companies that we're investing in or looking to invest in, as we guide them. They just have to know where they're at revenue wise. They have to know what their burn is. They have to know how much longer they have before they either need a next tranche of capital, and where the money is going out the door. Because if they're not managing that well and they're not on top of it, even at the highest level, we see all too often that they raise the white flag when there's a month left, and had you raised that 6 months ago, we might have had time to course correct and slow the burn and figure out how to raise the additional capital. But when you raise it right at the very end, then it's too late. So, for me, it's just all about understanding how much runway you have, where the cash is going, where the outflows are, what's critical, in order to ensure that you're going to keep the company going.
How early stage are the tech companies that start with you?
So we have several that are pre-revenue. One of our funds, the Infinite Corridor Fund, is specific for emerging technologies and out of MIT. And some of those investments are literally to fund the patent work. So we'll play really, really early in that pre-seed stage out of that fund. In our general fund, we're more of a seed or Series A. So if it's a device that needs regulatory approval, we'll often invest before FDA approval, before design freeze, and get in there with an understanding of how that company gets to market. If it's software, we'll oftentimes, if we think the technology is extremely compelling and we know what the use case might be, we want to get in there early and hold our position. There's lots of funds that will invest once a company gets $1 million in revenue, and there's fund after fund after fund out there that is looking for that. We want to be in early and already have a secure position and help them get to that point. All 5 of our managing partners have been operators. We've all started companies. We've all made a payroll. So we understand what it means to build something, which we think makes us really good early stage investors.
How did the pandemic impact your tech surroundings?
Yeah, as sad as this is for a lot of people, for several of our portfolio companies, this really has been a good market shift for them. One comes to mind specifically that we invested in was a remote respiratory monitoring device that was in a pilot phase when COVID hit. And as soon as it hit, the pilot sites that were using it bought out all their inventory. And we put another investment in just to fulfill additional orders. And then they got their FDA compassionate use clearance that day. So it has really fast-tracked and accelerated that company. Some of the others, one comes to mind is a company called Rios, which makes floating sunglasses. They're amazing. And they had about 300,000 of orders halt right when COVID hit from retailers, but they've more than made up for it in direct online sales. So, the market opportunity, when it shifts, it does create opportunity for some. It doesn't have to be a death sentence. And the types of things that we are investing in, those technologies, we do think about that on the front end. If they have to sell in a market 5 to 7 years from now, and we don't know what that market dynamic is going to be, and so are they still going to be attractive at that time? Are they doing something so meaningful for their customers that they're going to weather the storm? And by and large, most really have. And so it's gone well for us.
What business books inspired you recently?
So we hosted interns over the summer, and I had all of them read Venture Deals by Brad Feld, which is a great, I call it a 201 level kind of book for the venture community. And, I think they do a really nice job of going through the terms and what to look for when doing a venture investment. So I'm a big advocate of Venture Deals.
And on a personal level, which book touched you?
The one that comes to mind recently is The Alchemist. And I don't know if that's come up before, but really enjoyed that story, and made me evaluate, how I think about things upon occasion. So really enjoyed that one recently.
What did you recently change your mind about?
Oh, I think just perspective on, life. I've been through a lot personally, and I'm sure everyone has, and we all have our journeys, and, just the attitude about going forward and day to day. And I have 3 children, and so thinking about being the kind of father that I can be proud of for all 3 of those of my kids. And so it's just being the best you can, and waking up every day and knowing also you're not perfect, but you got another opportunity to do your best.
How did the pandemic impact your being father?
I got a lot more time with my kids because I was a homeschool dad, half the time. So, at that time, certainly if we would have done this in April, you'd see a couple of them, jumping in the background, also helping them get on their Zoom classroom. And, thankful for all the teachers out there, because being a homeschool teacher for a little while, it's not my calling, that's for sure. So but the ability to really spend a lot of quality time with them was a blessing.
Who should be my next guest?
I want to nominate Jake Burton, actually from Rios, who weathered the storm that I mentioned, and I would love to have Jake be on the show.
Thank you so much, John, for being on the show and sharing all your knowledge and wisdom with us. Come back soon.
Will do. Thanks for having me.
We all know that working in sprints is better, but how do we know what we should work on? You're in luck, because we have a 15-minute exercise that will give you complete clarity on where to take your project next. Go to strategysprints.com/sales to complete our short exercise and meet one-on-one with an expert sprint coach to identify your #1 bottleneck. Hey everyone, I hope you enjoyed that episode of The Strategy Show. Make sure to like this video below and subscribe so that you can stay up to date with every episode of The Strategy Show. Get daily CEO tips from CEOs for CEOs.